So we have our monthly U.S. jobs report out, and it was a very mixed bag. A big shortfall in the non-farm payrolls change at only plus 98K, and on top of that, a minus 38K revision to the prior 2 months' data. This saw that usual knee-jerk reaction of the dollar selling off, but we have a couple of offsetting factors here simply because we've already decelerated Fed expectations so much coming into today's report. On top of that, we had a bit of geopolitical fuss overnight, and we have U.S. bond yields down at key levels. So I think the market was sort of ready for a bad data as well. If we look at some of the reports out from Goldman Sachs and others that there was a big weather event in the U.S. that was possibly affecting the payrolls number, and that didn't, in fact, turn out to be the case. As well, we have some offsetting other good data within the report itself. If we look over at the unemployment rate, it's down at 4.5%, a 0.2% drop. That's a big drop, and it's not coming at the cost of the participation rate, which was steady at 63%, meaning that the household survey showed strong jobs gains. The underemployment rate as well notching 0.3% lower, the lowest since early 2008. So all in all, it's a mixed bag, and we can look through this report as long as next month's doesn't show some sort of remarkable weakness. And as well, the average hourly earnings was indifferent by notching a little bit lower, as was expected. So it's basically a hold, and again, given that we've already sort of discounted Fed expectations so much, the market is happy to pick up the dollar again after the initial reaction. So, and it's so important there on that account because we have been testing some key levels in some dollar pairs. Euro dollar well at the highs, but dollar yen been flirting with those lows for the cycle as we have some wobbly risk appetite recently. On the other hand, the dollar very strong versus the generally risk exposed Aussie, and we're flirting with the 75 area as I'm talking here, a very key level for that pair. Iron ore futures were weak overnight, and that's a key indicator for Australia. So going into next week, got some interesting levels to look at. Not so many interesting data points until we get work into later in the week. We have the Australian jobs report midweek, and then we have the to finish the week the CPI from the U.S. and retail sales. So let's look at those key levels on those. I think the sort of the two poles of where the dollar is: the dollar versus yen. Yen tending to do well, risk off with lower yields. And we have U.S. yields near that very critical 2.3% level. And on the other side of things, if things are going risk off and there is a sense of, a further sense of wobbliness in risk appetite at 75 level in Aussie dollar, and even without a bad risk appetite, I think the reasons if the dollar outlook is picking up again and commodity prices are not doing well, Aussie dollar could also fall in that scenario. So that's your look ahead at the week in front of us and a brief comment on that U.S. jobs report.